doing, everyone? Welcome back to a brand new episode of the Weekly Jab. Hope everyone have a great week so far and looking forward to their weekend as well. So what we're going to do today is just sort of walk through. So again, the Weekly Jab video is a little bit more articulate, obviously spoken word, but essentially a different format or forum to be able to talk about what I disseminate out within the Weekly Jab newsletter on Substack. So some people prefer to read, some people prefer to watch videos. So I'm just looking to offer two mediums for people to be able to consume the content in whichever way that they find most valuable or most comfortable. So with that being said, I'll walk you guys through the newsletter that I released about an hour ago, giving obviously video commentary over top of it. And then at the same exact time, maybe talk a little bit more about where I see some things moving forward over this week as well. So without further ado, what I will do is I will begin to share my screen and we'll start and we'll get it rocking and rolling. All right, everyone. So where we have here at the beginning of it, just general announcements, what I think is important just to briefly note. So one of the main indicators and one of the main analytical tools that I reference without the Weekly Jab newsletter, but also just in general, if you guys follow me on Telegram, Twitter, or anything like that, I talk a lot about the Hearst exponent, and I won't bore you with the details. We talked a little bit about it in the first video. Essentially what it is, it's more sophisticated. It's a fancy momentum gauge that we've been able to see and test to utilize for determining high probability events whenever markets might hit inflection points. So where bull momentum might switch or reverse into bear momentum, i.e. market tops, and then same exact thing on the downside. So where bear momentum might reverse and switch into bull momentum, i.e. market bottoms. So what I did is I took time and created the Hearst exponent white paper, and I published that on Substack as well. So what I'll do is I'll put a link. There's a link here within this newsletter if you guys received it as well, but also I'll put a link at the bottom of this video as well for anyone that wants to look at it and read into it a little bit. I think it's 100% worth the read, especially if you guys are finding interest in some of the stuff that I'm talking about. I think this will for surely help you too. And then also the Telegram channel, the link here, again, I can put that also at the bottom at the video here as well, because I think that is another useful tool because it's more real-time updates that I kick out in terms of the Hearst exponent, but also its risk indicator cousins throughout the week as well. So without further ado, we'll just jump right into it. So the Hearst exponent has continued this sort of large precipitous decline since peaking out, at the beginning or late May. So it touched 0.7. We talked about it yesterday and has proceeded to drop quite strongly since then. So since Hearst peaked, price has been in a downtrend, but for the most part, it's been fairly resilient, which has caught many onlookers by surprise, myself included, especially considering the slope of Hearst. Seeing how fast it is dropped. So with that being said, Hearst continues to fall, and this week it officially hit the oversold levels or accumulation levels, depending on how you want to think about it or frame it within your mind, which again, if you remember from last week's videos, that is beneath 0.35. So it currently sits at right now 0.32 and looks to continue to be, pointing that it's going to go lower. So I know what you might be thinking in your head. Great, this is awesome. That's a bull signal. It's time to rock and roll. Okay, not so fast. Let's just pump the brakes for a second. So an official buy signal will only be triggered or initiated, at least how we look at it and view it within the fund. This isn't investment advice, but how we think about it and craft it whenever we're thinking about putting on additional exposure from a long side within the fund is we want to see it bottom. We want to see the indicator confirm that it has bottomed, it's no longer decreasing, and now it's beginning to increase a little bit. So we have not seen that yet within the Hearst exponent. And quite frankly, it doesn't look like that's going to happen at the current time, despite being within the accumulation phase. So what it's signaling right now is that, yes, a bullish inflection point appears to be on the horizon, but it is not confirmed as to when the appropriate entry point should be or when that inflection point is actually going to occur, given the exponent has not bottomed. And very similarly, if we just look at the Hurst exponent and then do a moving average of it, I think this is a 7-day moving average. It essentially gets you to a similar framework, but it removes a lot of the noise, which you saw in some of the other charts, the prior chart that I sort of had up here. So where it's sitting at right now is 0.39 versus the 0.32 with the unsmooth Hurst exponent. So again, using a moving average, it's kind of telling the same exact signal that the unsmooth Hurst exponent is telling, is that we're getting very, very close to a buying inflection point, but it's not quite there yet. And the moving average just does that in a little bit more of a smooth way, given it has not fallen beneath 0.35 just yet. So you're not saying, well, maybe it's time to get in. So again, 0.39, good. Still needs to fall a little bit further. And even if it does fall beneath 0.35, still needs to bottom, very similar to the unsmooth version of Hurst exponent. So moving on to the risk indicator cousins. So again, I think I mentioned it last week in the prior video. These risk indicator cousins they're powered by some components of the Hurst exponent, but also we have included additional technical metrics and indicators that we have seen both statistically and both anecdotally to be highly relevant for price prediction, or highly significant for price prediction, at least how we look at it within our general framework within the fund. So this is just one example. We have multiple calibrations of the risk indicator, but this is just one example that I like to use, and I think it paints the clearest picture for the onlookers. So again, very similar to Hurst exponent, this particular risk indicator version is at 0.3. So yes, it's already in the oversold territory and the accumulation levels, but it again has not bottomed. So it has not started to recover. Thus, yes, it is, getting into a frame where a buy signal is looking more and more likely on the horizon, but we're not there. We're not there yet. We needed to bottom. We needed to stop declining and then ultimately begin to increase on the way up as well. So very similar to what we did with Hurst exponent 2, we can just take a moving average of this risk indicator to dull out some of the gyrations and some of the noise that you'll get on an hour-by-hour basis. And essentially it comes to 0.36, which again is close to producing a buy signal or falling within the oversold or accumulation levels, but it's not there yet. And it's offering something very similar to what you see from the Hurst exponent as well, in terms of moving average, but also in terms of unsmooth too. Last week I mentioned I was going to start to add in some technical analysis because I think it is incredibly important, and also we've seen the influence that looking at technical analysis charts can have within this particular market. So quickly, we'll just talk about the 3 things that I generally focus on. I focus on a few others, but the 3 principal things that I put out within the newsletter, but also I focus on myself, is volume flow, momentum, and looking for key support and resistance levels. So I validate volume flow via the volume flow indicator, which can be found as a plugin at TradingView. And then also I look at momentum through relative strength index, the RSI, which can be found as a plugin on TradingView as well. And then I look at key support and resistance levels through the Ichimoku Cloud, which again is another plugin that can be easily found on TradingView as well. And I think one of the more interesting things that we're seeing is that on the 1-hour chart, price was looking, or volume flow was looking quite good leading up to this breakout and during this breakout. But yesterday's fall back from 9,400 to approximately 9,100, 9,200-ish kind of trading hands right now broke the upward trend line, and now it's beneath 0. So for those of you that aren't familiar with the volume flow, VFI, generally anything trending positive is going to be good for price. But anything, but whenever the value is above zero, that's typically a bullish signal. Whenever the value is beneath zero, that's typically a bearish signal. And the highest probability signals typically coincide whenever there's a divergence. So if price is trending downward, but the indicator is trending upward. So this is a good example. So on 1 hour, dating back here, price was kind of not trending upward or downward, but kind of just oscillating within this very tight band. It may be slightly up, slightly down, depending on whenever you started. But you saw a trend moving upward from VFI and breaching above zero, which resulted in the huge up push that we saw or experienced at the beginning of the week. So that's just an example of a powerful utilization of this particular tool in terms of divergence. But that has since reversed, although RSI is now in oversold territory. So price might get a little bit of a bounce, but it's currently budging up into cloud resistance. So being above the cloud here is positive, a bullish signal, but falling back beneath the cloud is a bearish signal. And now it's trying to get back into the cloud and breach above it, but it's hitting into cloud resistance. And at the time of writing, or the time that I'm sort of talking, it still failed to breach above that. So we'll have to keep a look on that. And on the 6 hour chart, we see a similar thing, just from a different perspective. The volume flow has been demonstrably downward, signaling what the trend has been essentially since post-halving. The RSI trend, if you look from peak to where we're at now, has been demonstrably downward as well. And then also price is now back beneath the cloud and struggling to breach above resistance levels to get back into the cloud. Also, if you saw where this most recent push came, it failed to breach above this resistance level, so break above the cloud and then drop back through. That's a very bad sign for price, at least in the initial term. And then last chart that we look at on the 1 day chart, combining all the things that we had looked at prior and that I had just spoken about, it offers a very similar picture to where the general trend on the 1 day chart for RSI has been down since halving. Same exact thing for volume flow. On balance volume, a little bit less so, but still a light decline. But what is inverse to some of the previous charts is the fact that the cloud, so Bitcoin has been above the cloud ever since it breached, I think this level, the key level was approximately 7,000. And that's been a bullish signal ever since, which has materialized in the form of price. Had you bought at 7,000, you've made a good chunk of change on the way up to 10,000, or even right now, if you're still holding around the 9,100, the 9,200 level. What you're seeing right here is price continually trying to drop back into the cloud. But because we've got this huge cloud right here that offers strong support, strong buying pressure for price, which you've seen repeatedly getting bought up, bouncing, and then bought up, bouncing. So it is going to try to breach. So bears are going to try to breach this particular key support level again and get price into this cloud. It's a very big cloud. It's a very strong support. I don't know whether or not that's going to happen, but if we just look straight at our indicators, RSI, VFI, and on balance volume, and anecdotally testing key support levels multiple times over and over again, typically never ends up well for price, and usually the support ultimately folds. So we'll have to keep a key eye on that over the coming days, especially over this weekend, whenever volume typically gets sucked out of the market a little bit. So if it does fall back into the cloud, then that opens up a whole slew of bad alternatives or bad possibilities for Bitcoin, where it can fall to 8,500, which is the first key support level. 8,000 is an additional key support level. And then if it starts moving further than that, then we could end up all the way back down here at this strong Kumo cloud support, which I believe is approximately 7,100. I don't suspect that we'll get there, at least looking at the charts or the data that we have in front of us at the current time. But you can't really rule anything out, especially with some of the macroeconomic headwinds revolving around COVID and just general economic weakness hanging over this particular market's head. So with that, let me take a step back, because I have spoken a good bit, and let me kind of summarize. In summary, our quant indicators are pointing that there is a bullish inflection point on the horizon, which we strongly believe, but it has not bottomed. Thus, there is not a buy signal available. So we don't recommend anything because this isn't investment advice. But from our particular perspective, we're going to be strongly looking to see whenever our indicators bottom and to begin to increase, and preferably having that coincide with a positive development within technical analysis as well. Just another sort of check of the box to say, like, okay, we're getting an additional confirming piece of information for us to want to layer on some more long exposure. So our quant indicators are saying that a bull inflection point is on the horizon, but we're not there yet, and sit tight, be patient. Technical analysis is actually flashing a different thing, saying that there might actually be a drop, potentially a demonstrable drop in the near term, before we hit that bullish inflection point that our quant indicators are signaling. I don't know if that's going to happen. Again, I think ultimately it's going to come down to whether or not those key support levels, that big cloud that I just showed you, can hold. If it can hold, then we'll probably get a bottoming and bullish inflection point sooner rather than later without too much price pain. If that can't happen, 8,500 is definitely the first key level that I'm going to look at, but it depends if volume picks up in the market again, specifically on the bear side, and it blows through that level, then we're going to really need to assess, to look whenever longs are going to start to come into play, or we start to look at that. Again, preferably coinciding with some strong developments on the technical side, whether that is volume flow, divergence like we saw before, maybe on the longer term time frames, same exact thing with RSI, or maybe seeing strong buying volume come in for the bulls at a key support level, maybe like 7,800 or 8,000 or whatnot. That coincides with Hearst and risk indicator cousins bottoming and beginning to trend upwards. That would be an extremely strong buy signal that we would obviously share within the newsletter, and we would obviously share within video developments as well. So with that, again, this is the second edition of the Weekly Jab. Again, a little bit long-winded, but given I was walking through the indicators, giving a little bit of a review lesson, and also introducing the technical analysis piece at that same time, I felt it was worth the additional bit of time that I was sort of sitting here talking to you and jammering on. So if you liked what you heard, please subscribe, please like. Again, I will put links for the Hearst Exponent white paper and also the Telegram signals at the bottom of this particular video. If you like it, share it, subscribe. Everyone have a great weekend, be safe, and I will talk to you next week for the next edition of the Weekly Jab. Thank you, everyone.